Tom Lee says he expects stocks to draw down at some point in the first half, but hasn't seen the signs of a near-term top. Let's bring in Tom Lee, managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. I referenced our conversation. We weren't in makeup per se. Sometimes we talk in makeup. This just happened to be outside of the makeup room.
Yes.
But we're still talking. I like it better when we're actually sitting down and sort of, I feel like that stimulates me when we're both. Not really. You said immediately there's some dry powder left. It's not over yet, although there are some signs of fatigue.
Yes, I mean we've rallied 16 weeks, up 23%. The last two sort of long rallies were 16 to 19 weeks and 21 to 22%. So it's mature, but we don't see the signs of the tops. Normally, like margin debt is only $700 billion. It was $900 billion in October 21, and there's still $6 trillion of cash on the sidelines. And even this week into NVIDIA earnings, I kind of see the stock kind of weak into the report, which makes me think the stock could surprise to the upside. And I think that would sort of help us get some more juice on the upside from here.
That's interesting. The one of your calls, which and I remember at the time we just said, stop doing that. It was like a weekly call for the S&P based on an inflation number, on a friendly inflation number. Last week, we did not get friendly inflation numbers. But do you think that the trend is intact?
Yes, I think there are some difficult seasonals because companies raised prices in January. That made January look like a hot CPI number. And I think February CPI, which comes out next month, is going to reverse some of that, and it's going to put investors in the bond market thinking inflation is falling again. So.
Oh my God, that'd be a great time for another one of your calls. If you hadn't sworn off making a call on where the S&P will be in a week, that would be a good time to do it, but don't.
Yes, I've promised myself not to do that.
Okay.
But can I just ask one question? Given this sort of short-term bearish, would you call it short-term bearish?
Well, I think there's going to be a moment where investors have to get cautious, but it's a maturing rally, so I don't think this is.
So I guess the question is, for those folks who are sitting around with cash right now, everyone's always trying to figure out, I have little cash. If they have cash, what am I supposed to do? Are they supposed to wait for some kind of grand moment to put it in the market? And of course, timing is always sort of a challenging thing to do. Are they supposed to put it in Bitcoin? I know we'll probably get there in about a second. What would you be doing with your money if you knew things were about to get worse and not better?
Well, we know markets have a pretty good 12-month runway from here, and I don't think investors should be 100% cash. I think if they have been sitting on cash and missed a lot of this 24% move, I think they need to dollar cost average. Put a little bit in on weakness, and this has been a kind of a weak week. And then just be patient. I think patient money is really the money that's been working the last few years.
But you don't think that that the Fed needs to stay tighter longer because inflation is still a major problem? You think that we will get some rate cuts this year?
Yes, and I think again, I know the statistics don't show it, but I think the job market has weakened a lot. One of the big drivers of inflation for the past 8 months has been auto insurance, up 23%. I'm not sure monetary policy really gets auto insurance rates down. It just has to play out. And, housing is starting to really come out the other side so we can get lower inflation.
Is it still get a soft landing, or is it getting harder?
I think the economy's actually stabilizing, and then if we get lower interest rates, it actually really stabilizes the economy.
So to recap, the markets have rallied 16 weeks and 23% in a row, guys. That's a very mature rally, very overextended. Mr. Tom Lee is expecting a drawdown in the first half of 2024, but so far he's not seeing any topping signs. He did reiterate the $6 trillion in cash on the sidelines. Other contributors keep bringing this up as well. I'm not sure why they all think that this is all going to come into the market, but we'll see. Maybe they know something we don't know. Tom said he did see some latest reports, and now he thinks NVIDIA will surprise to the upside. Yesterday and a couple days ago, he was thinking that they might surprise to the downside. He expects February CPI to turn back around and to be good data. So that'd be great, because if we have 2 months of negative CPI data, that's going to start looking very bad for inflation coming back down. Tom's forecast for the S&P is likely to reach 5,400 to 5,500. The next 12 months for the markets look good. He says slowly dollar cost average in, but with this big rally that's recent, be careful putting big chunks of money to work. He says patient money has been working the best over the last couple of years. Patient money is king. Major averages are on track for the 4th straight month in a row, guys. That doesn't happen often. That's just getting stretched for someone, even if we just need some consolidation, that's getting stretched. It's time for a little pause. We don't always have to have a big drawdown. NVIDIA earnings are today after the bell, guys. February 21st, it's going to be an intensely watched earnings report. It's really going to shake up the markets, whether it goes up or down. Hope you enjoyed the video. Catch you in the next one.